It looks like the market is very disappointed with your forecast for $4 billion of EBITDA in 2019. They were looking for $4.77 billion. Why did the analysts overestimate your profitability so much for 2019?
Well, when we provide our guidance, of course, we have to look at the situation as we see it, and we see a world economy that is growing less this year than last year. We see a lot of trade tensions, of course, negotiations ongoing between the U.S. and China. Seems like they have positive momentum by now, but we don't believe that's the last of trade tensions, even if a deal is made, because the U.S. also wants to have a discussion with Europe. And then, of course, we see an oil price that is creeping up, which affects our input costs. We expect demand in our ocean segment really to be only between 1% and 3% growth this year, and that is, of course, a big factor when we look at our guidance.
Let's break these things down then, if you will, Soren. First, on the oil price, we're seeing relatively high levels. As you say, that makes your input costs rise. How do you expect that to shape up over 2019, the price of crude?
I'm not much of a forecaster of the price of oil, to be honest. But obviously, the level has been going up now for a little while. It looked like it had stabilized around 60, and now it's 66, I believe, yesterday. So for the Brent crude. And I don't really see any good reasons for why that might drop back down to 60 anytime soon.
Well, and how far in advance do you lock in your diesel contracts? I mean, what does 2019 look like as far as fuel for you?
Yeah, so we actually don't lock in fuel prices. So we are buying at the market price.
I see. Okay, so that fluctuates throughout the year. On demand, you said 1% to 3% growth still. How hard has that been hit by trade tensions? I mean, where have you seen that affecting shipping already?
So I think it's fair to say that in 2018 we did not see trade tensions having a significant negative impact on demand growth on the ocean. Actually, a little bit to the contrary in the China to U.S. trade, where U.S. importers clearly were front loading, their imports to get as much into the country ahead of potential tariff increases as they could, and that actually also impacts our guidance for this year, because some of that front loading, of course, will have to impact demand this year by inventory, by the effect of inventory drawdown. So we see a negative impact of that this year, and then of course we have the outstanding matter of the trade between the U.S. and Europe.
Let me ask, I'm not going to ask how you think that's going to turn out, but I wonder how the market on the supply side is going to turn out, Soren. When do you see a healthy healthy balance, I should say, between supply and demand?
So we continue to believe that the supply and demand balance is improving on the ocean as the new capacity coming in this year at the growth level is close to 5%, but a lot of capacity will be absorbed this year from retrofitting of scrubbers and so the supply-demand balance, is looking reasonable.